So the reason why it's mentioned here about U.S. content and military is that the SBA does not have an issue with U.S. content. The other agencies, the Exim Bank and the Commercial Service, are required to speak to companies that only have or that do have at least 51% U.S. content in the product that they're either manufacturing or handling. So an easy example for the SBA is, let's say you're sitting here in New York, you're bringing in something from China, you bring it into New York, you put it in another box, you put a bow on it, you do whatever you do with it, and now you're going to ship it from New York and you're going to ship it to Australia. You're sitting in New York, you did nothing more than that. The content is not U.S. manufactured, but you are the U.S. shipper. You still qualify for the SBA programs, okay? You would not qualify for the Exim Bank programs, and the Department of Commerce would not be able to give you the full force of their resources, only because under the way these agencies have been structured and their criteria, they're really trying to develop more of the either the manufacturing or the workplace, if you will, in the U.S. Now, our agency also wants to develop jobs here, but we need to keep the wheel going. So again, the U.S. content for the SBA export programs, not an issue. The military comes into play really with Exim Bank because they are not allowed to finance or support if your product is going to be purchased by a foreign defense unit or a department in another country that does that, or if it can be used, if some component that you have or that you're distributing or whatever can be used for a military purpose. They are not permitted to do that. SBA does not have that issue. Again, our programs are open to that. I always get the question about, well, how much of an interest rate is there going to be on the line of credit or on the loan? SBA does not dictate that. That's negotiated between the lender and SBA. The lender has to reveal it to SBA, but we're not second-guessing their decision. We're not second-guessing their percentage. Now, of course, there's a limit to everything. I mean, they're not going to charge a company 18% or 20%. No, they can't do that. But what we're saying is it's between you and the lender. So the ones I've seen in recent times have been linked to either the prime rate with maybe an added point or two added to that. Sometimes they may be linked to LIBOR with a point or two. There may be a ceiling or a floor. They're not building a house. What they're building is the structure of the cost of the money. But that's really the discussion between yourself, if you're the borrower, and the lender. With respect to charges, now, if this program or one of the other programs that can go on as a line of credit, if it goes on as a line of credit, traditionally, if you're dealing with a bank, a line of credit will go on for 12 months, for 1 year. And that's what we advocate as well. You can actually have this program for 3 years, if that's acceptable between yourself and the lender. The difference is that if you go for 3 years, the rate that the borrower, the cost that the borrower has to pay as a fee is significant, as opposed to the 0.25% of the guaranteed amount if it stays within the 12-month or less. So what most lenders do, if they're going to use this program, they'll put on a line of credit, it goes on for 12 months, and then at the end of the 12 months, just like a traditional line of credit, it is reviewed again and renewed for another 12 months. And there is a 0.25% at that renewal on the guaranteed portion. So yes, the borrower does have to pay that. But the borrower has to decide, do I put it on for three years if I want and take the hit of 2.75 or 3% right then and there, or do I take it on a year-to-year basis? Remember that the objective here is technically for the company to graduate and not necessarily need the additional support to the lender of the guaranteed program. You should be building the business. You should be growing the business so that your financials can stand on their own and the bank can give you a line of credit based on your own business activity. That you have to prove to them that you can repay the debt. I say this all the time, and someone like David, who's probably heard me say it over and over again, I'll say it again. At least once, sometimes twice, every week, I will get a phone call from someone, and they will say to me, you know, I want to start an export business. I don't have a business set up yet, but you know, I have either somebody I know wants to buy whatever it is in some foreign country. I just need to get it from the US to them, and I usually ask them a few questions, and then I'll ask them, well, how much do you think you need to finance? Oh, I just need $1 million. I don't know if it's the same person that's calling me all the time. I can't figure it out, okay? But what are you thinking, okay? I mean, and I'll say this again, and I can say this to you because I've spent a lot of years in banking and I've fought my own battles internally. If you don't know what you're doing and you can't pay something back, the banker's not going to give you a loan. They're in the business of banking. They're not in your business. You know, you want to sell something overseas? Great. But don't expect the bank to be your partner. They are your financier, which means you have to prove to them that you have a valid business. You have to prove to them that you're going to be able to repay something that you're asking for. So if this person, male or female, is asking me for $1 million, you better be able to repay it if you're going to get it. So a lot of times people get frustrated because they go to the bank and, you know, they're sitting there and they don't understand, why doesn't the bank want to give me this? Why doesn't the bank want to give you that? Well, number one, you should be prepared before you go to sit down to the bank. Okay, if you're a startup company, these programs, all the programs I'm discussing here, you have to be in business at least 12 months. You don't have to be exporting, but you have to be in business at least 12 months and show that you have a real business. I've done some sales. I actually produced revenue. I did it, and I'm in the black. Okay? The banks will, as a general rule, want to see at least 3 years business activity. Why do they want to see 3 years? Well, of course, that's because it proves that you have a viable business, but statistically, small businesses fail within the first 1 to 3 years. Okay? That's really what's behind that. And as I tell people, and think of this like the Wizard of Oz, okay? We're taking you behind the curtain. I can tell you stuff now that the banker's not going to tell you if you're sitting there, but I'm not in banking anymore, so I can tell you all of this. As you're sitting across from the banker, and in particular in current times, they are thinking the same thing, no matter which bank, no matter where you are. Number one, why should I do this? Number two, do they know what they're doing? And number three, are they going to be able to repay this if I grant it? Even with the government guarantee programs, if the bank has a loan that defaults, they still have to report it to the federal regulators. They have to reserve for it. That means that they have to take money away from their pool of money to do their business and set it aside to cover, because they have to answer to the regulators and they have to answer to their shareholders. So even with the guarantee, that's why they're always nervous about whether or not you collectively are a good risk. So preparation, understanding, appropriate expectations. If you're a startup and want $1 million, it's not going to work. Okay? Next slide, please. Every week, I'm telling you, every week. Had one that just this week.
That's why it's so important to have a sound business plan.
Absolutely, and we'll get to that. As a matter of fact, I have a tool like that we can help you with. Okay, this is just a couple more points on the export working capital. They are guaranteed loans, so expect to sign a personal guarantee. It's required by the SBA. Anybody that has a 20% or more interest in the business will have to sign a personal guarantee. If you have a partner that's an overseas individual, there's a screening and there's a process that has to go through concerning that through the SBA. Collateral. Now for the export program under the SBA, export-related inventory, accounts receivable, purchase orders, these are all part of the collateral mix that are acceptable. It's still up to the lender to understand. So that's part of what I do. Okay, so I deal, if not primarily, mostly with the lenders to educate them and to make them aware that they can use these programs. If you're a business now, and let's say you have both domestic sales and you just started to do some export sales, some international sales, and now you want to grow those international sales. If you go to the lender now and you ask for a line of credit, they'll look at your domestic receivables and they'll give value, presumably, to those domestic receivables to give you a line of credit. The issue is, let's say that 70% of your business, as you grow, becomes international. you go to the bank for a line of credit, that whole 70% block of your business is being completely eliminated in the analysis because the bank doesn't want to give value to the foreign receivables because the buyers are overseas, right? So the remedy to that is use the program as a lender, if we had a lender here that was listening. Use the program as a lender, and the receivables can be included in that, and there can be value. The value can be up to 90% of those foreign receivables, which means more money, more cash flow for your business to operate. And certainly, although we don't have the Ex-Im Bank represented here today, we are all sister agencies working together. The Ex-Im Bank primarily is the credit insurance agency of the United States. What does that mean? That means that you can buy credit insurance through the Ex-Im Bank, and that credit insurance will in fact cover your foreign receivables for non-payment.